Okay, and welcome back, students who are taking financial accounting, and we are working on the Chapter 2 exercises, Group B. And in this video, in the previous video, we had started on exercise 29B, and it was labeled Part 1. This is number 2 in the series for that particular exercise assignment. Most likely we will have a 3, possibly a 4, maybe even a 5. It all depends. Right, so let's just pick up where we left off. We are now going to do number 2, which says record the transactions in the journal. Okay, so these are the transactions. Let me go down to a blank page. So this was our chart of accounts. These were our T accounts. And here, actually, let me do it like this instead. Record the transactions in the journal. So here's the transactions, and I'm going to squeeze them onto this screen, okay? And as I do each one, write it down, pause the video if you have to, because I'm going to erase them. You'll be able to look at the solutions and, the journal itself in the solutions, but I'm not doing, even though I have it sitting here next to me, I am working without looking at them, okay? And the reason why I have that, the solutions next to me is to be able to try to coordinate doing, the exercises in this video, so it makes a little bit more sense. So, of course, when you're making a journal entry, you should have, the format is you should have your date, and then you have your debits, and then your credits. Debits come before credits, okay? You'd put your account number here, and your account name for your debit here, and you indent to put your account name for your credit, okay? And then you have in one column your debit, which is your debit column, and the other column your credit amount. These are amounts, okay? There is also a posting reference, right, which we didn't get into too much just yet, okay? So when you have a journal itself, you're going to have the date, you're going to have the description, you're going to have the posting reference here, and then you're going to have a debit column and a credit column. So you'll have these columns, all right? And all you're doing is just filling in the information for a journal entry, however many lines you need. You'll skip a line, and then you'll put the next one. You'll skip, put the information for the next one, and you keep going down the page. There will be a page number here, so that you can use for posting reference when you post to the ledger accounts. But we're not getting into that just yet. Yes, we talk about making a journal entry and then posting them to our ledger accounts, but we're not actually, doing it, how can I put this, on the forms themselves. We're using the T accounts to simulate doing that actual work, okay? We're trying to get the concepts down, all right? The mechanics of it, you'll pick up in a little bit, all right? So it says here, September 2nd, sold 50,000 of common stock, all right? So I'm not gonna, I could put in the date, September 2nd, debit and credit. Okay, so I'm selling 50,000 of common stock, meaning the business is going to get cash for that stock. So I ask myself the question, am I affecting cash? Yes. Is my cash increasing? Well, it just went up by 50,000, so I'm increasing my cash, which means I debit my cash for 50,000. And then I choose another ledger account for the other half of the entry. In this case here, it's telling me I'm buying common stock, so I indent and I put the 50,000 there, and that's my journal entry. Okay. Now again, I'm erasing these, and you'll be able to, when I go to post them into these T accounts, you can look at the solutions to follow along from the journal entries there. Okay. All right. September 3. So I'm going to debit and have a credit. Paid monthly office rent $1,750. So am I affecting cash? Yes, right? My cash is decreasing because I'm paying it out to pay for rent. So when my cash decreases, I credit my cash for $1,750, and I have to debit something else. What am I paying? I'm paying my monthly office rent. So I look at my chart of accounts, and I say, okay, I know it's not an asset, I know it's not a liability, it's not equity, it's not revenue, it's an expense. Well, what accounts do I have under expense? Rent expense. And that's how I decide to use the rent expense account. Now, if you do bookkeeping for a long time, you basically memorize things, okay? Or if you're working in that particular business, you'll memorize your chart of accounts, but you still have it hanging up on your wall to reference it every so often, because you just have those mental glitches every so often. But like for me, knowing monthly office rent, because I created the account rent expense, I just knew it was the rent expense account. I don't have to be going and looking it up, right? But remember, there is an underlying process to it. Okay, I ask myself, to make the other half of the entry. Is this something I own? Is it something I owe? Is it an investment in the business? Is it a sale or is it an expense? And paying rent is an expense to the business for that accounting period. So I would look under the expense account and choose the most correct account from the list that I have. Okay, I don't just go adding stuff. That's the accountant's job, right? So 9.6, it says paid cash for new computer, 1,400. All right. So is my cash increase? Am I affecting cash? Yes. Is it increasing or decreasing? Well, I'm paying cash out, so it's decreasing by 1,400. So that means I'm going to credit cash for 1,400. Now, and this is what I mean. Paid cash for a new computer. Okay. Well, if you're not looking at your chart of accounts, you'd say, oh, a new computer. So I'm going to debit computers, right? And that's what some people will do, all right, for 1,400. And when they do that, that entry is wrong, okay? Why? Because you don't have, where is the account called computer? You don't just add in, account, just because you think it should have one, okay? No, you take what you have and you use what's there. I mean, you're purchasing something. Yeah, it's a computer, and you're going to own it. So you look at your asset accounts here, okay? And what asset accounts do I have that make sense? Well, I know it's not cash. I know it's not a receivable. It's not supply. Is it equipment or furniture? Computer can be deemed equipment, so I would use the equipment account, okay? Don't go creating a computer or a computer equipment account. Use what you have. In this case, it's equipment. So that half of the entry would be equipment. Okay, so that's the journal entry for that transaction. September 8th, purchase office furniture on account. Okay, so am I affecting cash? Well, no, I'm not, because I'm buying on account being receivables or payables, all right? It's an extension of credit. And since I'm doing the buying from a vendor, okay, that means it's going to be an accounts payable, right? So if I'm not using cash, all right, then the second question I ask is, am I using, a receivable or payable? And I just determined I'm using a payable, all right? So if I'm purchasing the office furniture on account and I know it's an accounts payable, I'm increasing the amount I owe by $2,700. So if I'm increasing my accounts payable, and accounts payable is a liability, I increase my liabilities on the credit side. So I would have a credit to accounts payable for $2,700, right? That means I have to debit something else. Well, what am I buying? It's something I'm going to own, all right? And so it's an asset. And what asset accounts do I have, and what makes the most amount of sense? So it's office furniture, so I choose the furniture account. Okay? So I'm going to debit the furniture account, right, for $2,700. No, it is not you're looking at this transaction right here, and just because you see office furniture, you don't write a debit to office furniture. That is not one of the ledger accounts. Okay. Where on this chart of accounts do you see office furniture? You don't. All right. You choose one of the accounts there, and that's furniture. So I would debit the furniture account. If you write office furniture, that journal entry is wrong. Okay. Because you don't have an account for it. All right, 911. Purchase supplies on account. Okay. Am I affecting cash? No. Why? Because I'm purchasing on account, just like the September 8th transaction here. So if I'm not affecting cash, am I affecting receivables or payables? Well, I'm the one doing purchasing, so it's a payable, and that means I'm going to owe more. So my payables goes up, and when my payables increase, I credit my accounts payables for 225. So now I'm purchasing what? Supplies. All right. Look at my chart of accounts, and you can see that there's a supply account. So use the supply account. And that's the journal entry for that. Okay. 919. Performed consulting service for a client on account. Okay, so am I affecting cash? No, right? Because I'm not getting any money. It's on account. So am I affecting accounts receivable or accounts payable? Yes. Why? Because I'm performing consulting services for a client on account, meaning the client's going to owe me, so it's an accounts receivable. Well, did my accounts receivable go up or down? Well, it went up because now I'm owed $1,835 more. Well, remember, accounts receivable, you treat it the same way as cash because, both are assets. So when my accounts receivable increases, I debit my accounts receivable for $1,835 and I credit something else. Well, what am I going to credit? Right? Perform consulting service for a client. Am I buying something that I'm going to own? That's an asset? No. Do I owe something, as a liability? No. Is this an investment in the business? No. So it has to be either a revenue or an expense. So it doesn't look like it's an expense because I'm performing the service. So I have to look at my revenue accounts, and the only account I have is service revenue, right? So I credit service revenue for $1,835. Okay, and that's my journal entry. Okay, let's see here. 920. Paid utility expenses. Am I affecting cash? Yes. Is my cash increasing or decreasing? It's decreasing because I'm paying out $285. So that means I'm going to credit cash for $285. And I'm paying my utility expense. Well, I know that is one of my expense accounts, so utility expense, $285. Okay, simple as that. And lastly here, we have 928. Okay, perform service for a client and receive cash for the full amount. Okay, so in the amount of $975. So am I affecting cash? Yes, because why? They're paying for it, right? So did my cash increase or decrease? It increases by $975. So if my cash increases, that means I debit my cash for $975, and I have to credit something else. Well, what am I doing? I'm performing service for a client, which is very similar to the September 19th journal entry. So if I'm performing the service, that's going to be service revenue as my credit for $975, and that's that journal entry. Okay, so those are all of the journal entries. So what we've done so far is we did number 1. Now recorded we did number 2. We just recorded the transactions in the journal. And remember that you can look at those journal entries in the solution, okay, in the solution manual, so that you have them. Right now it says post the entries to the T accounts, identify all items by date, and then calculate the ending balance in each account. Right, so I'm at 15 minutes and I'm going to stop the video here because even though it won't take too much time to post the journal entries to the T accounts, it's going to take time to do a little bit of the math. So I'm going to take this as a natural break and pick up in the next video.